Very power-packed panel indeed. So just to kind of set the scene for all of us, a lot has happened in the last 1 year. Fed has basically signaled the end of QE. The markets turned at the beginning of 2022. A lot of our LPs have suddenly, almost overnight, discovered that they were overweight on their private capital allocations, and so now have to pull back on investing further into alternative assets such as private equity as well as venture capital. So it looks like all of us are bracing for a pretty tough fundraising year ahead. Where exactly does Southeast Asia kind of sit right now? So my first question, that goes to you, Seamon. I mean, you have a pretty global portfolio across Southeast Asia as well as the rest of the world. How has that kind of fared, and where does Southeast Asia stand?
Thank you for having me. So we like Southeast Asia. So I've been calling Southeast Asia since I was working at Insight Partners. It was 2011. So calling it companies in Indonesia time. So kind of definitely seen some of the companies that develop. So yeah, we're global investors. So we're based in the U.S. We do allocate. We're active here. We do invest in deals here. I think there's a lot of opportunity. I guess first of all, a lot of the local funds here have gotten very strong, raised bigger funds, and there's a lot of talent here. So I was meeting just had a crypto Web3 lunch earlier, right? So there's a lot of entrepreneurs here, like Web3, a lot of folks moving here, especially from other parts of Asia, so I think there's a lot of talent here, and a lot of funds have there's still a lot of dry powder, especially at the early stage. I guess maybe it's harder for fundraise. There's some funds fundraise, but I think there's still a lot, super return, there's still a lot of LPs here, serious allocators here. So I think for the top entrepreneurs and top funds, they will still get funded. And then also there's been some exits in the region as well in the last year or so. So those exits out will allow money recycle into the ecosystem. A lot of early employees, they will come and start new companies, they'll angel invest, they'll mentor new startups. So I think that's very good for the ecosystem, and we continue to be active here.
You have a global portfolio, right? So I mean, just based off what we've been reading, the U.S. markets, especially private companies, a lot of them have seen a lot of down rounds. I mean, can you give us a flavor in terms of how your U.S. portfolio has fared versus what you've seen in Southeast Asia and what this means moving forward for Southeast Asian companies?
Yeah, I think definitely. I guess because we've been pretty cautious. We haven't to chase a lot of very high valuation companies. So I guess our companies haven't raised a lot of down rounds. Maybe we'll see. Maybe in the next couple of months we'll see. Maybe they'll raise flat rounds, or if they need. I hope we could also bridge them. But right now it's so far so good. And Southeast Asia, I guess we're seeing a lot. We met a bunch of entrepreneurs on my trip here. I think it's on the early stage. I think maybe the valuations have gone down a bit. So I think it's a good time to invest here. But still, I think there's still a lot of capital in the early stage. Maybe some funds, they have been more cautious in employing, but they still have a lot of dry powder. So maybe we'll deploy more. They have to invest. And maybe the later rounds, closer, because the public valuations drops, the later rounds will have lower valuations. So maybe the ones that raise a lot of money at high valuations, those companies might get stuck. But if you've been cautious on valuation, then we don't have those companies in our portfolio.
Yeah, maybe the rest of you can kind of take this next question, because I want to talk about valuations now. And all three of you actually do have growth stage unicorns and unicorns in your portfolio. How have growth stage valuations kind of fared, and what are you guys doing as investors to support your portfolio companies?
I can start with that. First of all, thank you, Christy, for having us. And I know we have a lot of out-of-town guests, so welcome to Singapore. It's a great time to be here in Singapore. Christy, you're so negative. I mean, there's a lot of bad things happening, but there's a lot of really exciting things happening as well too. I think just the fact that there are so many people here from so many places around the world, I think that's also a testament to what is happening in Southeast Asia. There's a lot of excitement in the region, and there's a lot of really positive tailwinds happening here. As far as growth stage goes, I would say valuations have definitely moved more at the growth stage than they have at the early stages. I think some of that has been driven by last year, a lot of the big crossover funds, the likes of Tiger, Insight, those type of funds, they became really active in Southeast Asia. And I would say that the vast majority of those funds they came fast, but they've also retreated pretty quickly from Southeast Asia. And so that, I think, has created a little bit of more space for the Southeast Asia-focused funds to invest more heavily in at growth stage. I think it's helped to moderate valuation quite a lot as well too. Yeah. And so I think, let's see what happens over the course of the next few months. I think we haven't really seen a lot of down rounds yet in this part of the world. I think it is inevitable, but quite frankly, the really strong companies, really good startups, especially the growth stage, those companies all raised capital last year in the last 18 months. And so the vast majority of those companies still have very healthy cash runways. What we're starting to see now is some of the companies that perhaps didn't raise enough capital or weren't really in a strong position to raise capital last year. Those type of companies are starting to come out, those growth stage companies, but a lot of those rounds are unpriced or they are internal rounds being led by existing investors. Yeah. So I think we're still at the very early stages of how this is all going to play out. And I think we don't deny the market dynamics here. Southeast Asia is not immune to what's happening around the world from a macroeconomic perspective, but I also do think that there's a lot of other really positive and exciting things that are happening in the market.
Yeah, because there's obviously still a bit of a gap. Like if you look at some of the US peers in the market, right, and we briefly kind of spoke about this, you know, say like car marketplaces like Carvana. So Caro is one of your portfolio companies, England. Or if you look at BNPL for Klarna at the beginning of this year, I think the valuations like fell off a cliff, like 70, 80%. You've got a couple of BNPLs here as well. A lot of these companies raised at very elevated valuations in 2020 and 2021. And yet you're not really seeing that adjustment in terms of valuations. I mean, how long do you think, how can we account for that gap, and how long will it take for some of these companies to grow into this actual valuation?
Yeah, sure. I still remember, I think 3 years ago, Helen and I were on the same panel, and we were talking about how we need to be more bullish about Southeast Asia, lots of enthusiasm in the room. And then now, I think for me, it's a good time to be fearful when everyone is bullish, which was 3 years ago. Actually, we invested quite slowly 3 years ago. And I think it's a good idea to be aggressive when people are scared, which is probably not now, but I think give it another 6 months. I do think there's another further, in the public markets, I do think there's further room to go down, even maybe 30% more, right? And then if you look at the data, and actually, if you really want the detailed data, you can go to our website. We have this tracker for free, insignia.vc/tools. So if you look at the seed, actually went up. Valuations have gone up. Seed has gone up. Pre-A has gone up. A has gone up slightly, but almost flattened off. But you look at the Series D, is like down 50, 60%. I think Series B is like down 40, 50%, right? Which kind of reflects what you said, that there is some adjustment to where the public markets are. But I think there's still a lag. And I think the lag from public to private is about a year. So you haven't seen it percolate all down to the seed and pre-A yet. But I think it will. And if publics are going to go down another 30%, that means everything across the board is probably going to go down as well. So that's on the gloomy side. The more positive side is that it's a great time to invest. And then I think the other thing is that Southeast Asia is still in the, I wouldn't say early innings, but in the mid innings of where, you know, the secular middle class growth is, right? And so there's a lot of interesting business models that we see that we haven't seen 5 years ago, right? 5 years ago is what? With the X for Southeast Asia, the Y for Southeast Asia, right? Now I think we're starting to see some new local hybrid models emerge. And I think this is, so one example is, you know, like Singapore headquartered companies leveraging Chinese engineers, targeting the world. Well, C is a great example of that. And they have proved that they have built a, well, used to be $200 billion, now rating $40 billion company. And I do think that's an interesting trend. And I think the other interesting trend is, I don't know whether some of you do the weekend walking groups thing, right? So if you go look at some of these WeChat walking groups of Chinese entrepreneurs coming to Southeast Asia, it grew from 10 to 50, now it's 500. So you go to MacRitchie Reservoir, you see 500 Chinese entrepreneurs walking at 7:30 in the morning, which means that, well, for founders here, be very careful because the A team is here. Used to be, you know, like some Chinese guys who were, you know, like maybe couldn't succeed in China, they come here. Now you're seeing the best and the brightest from China, right? So that also it's a threat and an opportunity because A, they'll start to eat the local market share of some of the local founders. But B is interesting opportunities for us as investors.
Maybe next question for you, Helen. But you're not allowed to finish his sentences because that was what you guys were talking about. But jokes aside, do you also foresee a market correction as well coming anytime soon? How is that kind of changing the dynamics of how you see AC Ventures continuing to invest in Southeast Asia? If you could also draw some of your own, your observations investing in China versus Southeast Asia, I think that would be super useful as well.
Sure. So maybe to just give some background, I spent last 17 years in China. I just relocated back to Singapore. I've been covering Southeast Asia for the last 5 years. I think it's an interesting time to be here and talk a bit about what you mentioned on the valuation front, right? I heard from this global investor there's a funny party, where one side you have the founders, they're saying, I don't need to raise money, I'm good, right? If you want to hit me with a, silly valuation, I'll consider it, right? And the other side, the VCs are saying, hey, no, I'm good. I don't need to invest in you. So I'm going to deploy my money really slowly. So that's why I think we haven't seen that much of a correction, right? Even though, like you said, the public markets, you've seen like 80, 90% correction. But, in Southeast Asia, the ones that don't need to raise right now are not raising, right? And the VCs are like, I'm good, I can deploy slowly. So I think really the, rubber hits the road maybe next year when, more of these companies will have to go out into the market to raise, and we'll see how that, market turns out then, right? But for AC Ventures, we're well positioned because we're on the early stage side. We are, less sensitive to the public market fluctuations, I would say. So we also believe that, it's a good time now to be investing. We do see that a lot of our companies actually have an easier time to recruit the best talent. They don't have to worry about, fundraising, or they don't have to worry about all the noise in the market. So so I think it's time to just hunker down and do what we're, supposed to do, right? Just focus on the business itself.
A number of you have also raised very large funds, so including like AC and Insignia yourself, over time, the last few years that I've been covering this as well, we've seen the fund sizes grow larger and larger and larger, right? We're sitting on record amounts of dry powder, even like right now, which, obviously will place increasing pressure on GPs to deploy at pace at larger checks, even in this kind of climate. And LPs may see this as a potential risk factor. How does your firm kind of think about exercising discipline when it comes to pace of deployment?
Well, for us, we are quite right size. We think about the right sizing the fund to the set of opportunities. So we're focused on early stage. We're a $250 million fund. Our last fund was about 200 million. So I think that's probably the good size for Southeast Asia focused funds. I think that, of course, as your fund size gets bigger, it's harder and harder to generate the returns. It's harder and harder to find opportunities to deploy. Previously, I worked at $2 billion funds, so I have a sense of what it's like. And I think it requires a lot of discipline, right, for VCs to make sure that they, while you want to have some visibility and you want to be one of the most active investors so that founders think of you, right, when they think about, who they want to go to for fundraising. But at the same time, having a big fund is harder and harder to generate the returns that are required.
Can I just add to that? I think the fund sizes are getting larger, but the opportunity set is also getting significantly larger as well too, right? And so I don't think it's an issue of the funds are just raising more and more capital, and now there's going to be, they need to necessarily change their pace, right? Because the opportunity set is larger, the companies are scaling faster. To Elon's point, the quality of the founders is also improving as well too. And so I think the dynamics are also changing, right? And so the funds that are active in the region also need to evolve with the market trends and also lead the trends to a certain extent as well too, right? And so I think the increasing fund size, I think we should also see that as a positive sign that this entire ecosystem is actually continuing to grow and to mature and develop as well.
Just add as well, because we're active globally, so we also invest in LatAm, like Africa, like in some of those markets, like once you get to like Series A, then it's hard to raise Series B, Series C, Series D, so you rely on the global funds to come in. But Southeast Asia, I think the ecosystem has matured, like you guys are saying. So I feel like a lot of companies, when they get bigger, they can raise from local funds, not just give the allocation to the global funds, who are some of them are pulling back as well. So I think it's also good that the some fund sizes are growing.
Because the assumption is that if you're raising, the fund sizes are growing larger and larger. Like, you just take Indonesia as a good example of this. AC Ventures is one of those funds. You've got Alpha, you've got East. All of you guys raised at least 200 to 600 mil dedicated Indonesia-focused funds. And we're not even including the likes of Sequoia, which closed 850 for all of Southeast Asia, Lightspeed, Excel, all of these guys. Are we going to be heading into a situation where there's a lot of high-quality capital chasing too few deals? Because everyone here keeps talking about we don't have enough talent, the quality of talent is not the same as in China or in India or in the US, and it doesn't look like the pace of fundraising pace from LPs is slowing down anytime soon.
On that front, I'm actually more bullish because I spent a lot of time in China, and every year I was in China, I saw the competition for deals go even more and more intensified. And so I felt like China was at the stage where you really keep selling yourself to the founders. Like some people would camp outside the CEO's office just to wait for the CEO to come and meet with them, and so I think it was a little bit on the excessive side, and also a lot of money was kind of used very inefficiently, right, with subsidies and the whole community group buying and the whole grocery war was actually very dilutive, right, for investors. So I think that in comparison, Southeast Asia does not have so much capital chasing deals. And also, even, I think Southeast Asia is better even than India, right, which is another quite hot market. And I think, China and India, because of the billion-dollar population, it attracted so much of the LP funding, right? I mean, back to your question about LPs, I mean, I heard this year that LPs are most positive on just two regions in the world. One is obviously Southeast Asia, and one is India. So I think that among the emerging markets, we're still relatively well positioned.
Oh. What makes you think that Southeast Asia is better than the Indian market?
The Indian market? Yeah. Oh, I'm not saying it's better, but I'm just saying in terms of the, the velocity of the capital chasing the deals, the velocity of deals being done. I think that our ecosystem, is still not what it should be. I mean, think of the GDP, right? I mean, Southeast Asia is 3 trillion and India is 3 trillion, so it's about the same size, but there's 100 unicorns from India and there's 30 from Southeast Asia. So I think that, of course, people say, it's not homogeneous market, it's harder to scale, I think there's some truth in it, but India is not an easy market either, right? It's about 100 million middle class, and it's also very, they have lots of languages, and it's quite heterogeneous as well. So there is, I think in that sense, I think there should be more upside for Southeast Asia.
I mean, if you look at the GDP, right? Southeast Asia is bigger than India plus Pakistan plus Bangladesh combined. So that's an interesting data point. And I think if you look at, those who flew here, right? Those who take a plane to come to Singapore, how many of your flights are full? Show of hands. Okay,
flights were full. Oh.
And I've been in Ho Chi Minh, Manila, Jakarta, last 4 or 5 weeks, right? I mean, traffic gridlock, including Singapore, these few weeks. So I think that we do a very simple strawman test, which is the economy is booming. And if you look at, e-commerce, GMV is 1 trillion, it's going to be 1 trillion. So that's a sizable landmass of addressable TAM. But I think we had a conversation with one of my LPs, and I think her insight was very, very, very good, which is TAM times ownership times hit ratio, which is, you want a big outcome, you either increase your TAM, which said companies have to go global from here, or you buy more, instead of 10, 15%, you try to buy 20, 25%, or you try to increase your hit ratio, means do less silly investments. So I think there's a few ways to configure, but I do agree with you that if you take one country in Southeast Asia alone, TAM is limited. So you just take one Indonesia, you just take one Vietnam, you just take one Philippines, TAM is small. So the question is how you can partner with the company to help them actually go from Indonesia to Thailand. So you have two countries, the landmass goes up, right? Or Singapore to region, or Southeast Asia to the rest of the world. So that's one, right? And I think the second data point you'll probably see is ownership, which I think if you look at the learnings from China, you know, like used to be the case where Southeast Asian investors can buy 20-25% ownership. I think in China it was like single digit, right? Like if you look at
We started with double,
you
yeah.
all single digit, which means you got to not only just invest, you got to help partner with entrepreneurs, you know, and help build together, because there's no reason the guy will let you buy 25% if you don't do any work. So you got to work, you got to, you know, say these are the 4 or 5 things I can help you. This is the price, this is the ownership I want. If you want, we can build a great company together. If not, very hard. Right? Because the math eventually don't work to what you said, right? Fund sizes times outcomes in the region.
I'm going to pose the same question that I actually posed to Helen earlier, which is around fund sizes. I think you guys closed over 500 mil fund. It was oversubscribed. I believe it was way above your initial target. I don't remember what the target was, but it was definitely way higher than that. I mean, I just wanted to ask you a question in terms of what you think would be what is the right size for a fund in Southeast Asia?
The right size is any size that you can return 5 to 10x net on.
because you know, there is a correlation between fund size and amount of returns that you're going to promise.
So actually, there's a scientific study on it. So if you go to Harvard Business School, this paper by Josh Lerner, right? It's an inverted yield curve. So for US, this is a US data set, like over 20 years. The optimal fund size is about 400. So it's an inverted yield curve, right? Because if you are too small, you have subsize. You don't have enough fees to hire people, build capability. If you are too big, diminishing returns, right? So you have to be right size, and the question for Southeast Asia then is, where is the peak? So your guess is as good as mine, which is anything you can return 5x, 10x net.
Okay. Let's move on to, we haven't had a chance to talk to Jessica very much, but I wanted to ask you about like Goto particularly, I think, which is one of your portfolio companies. They are going to have a lockup period that's expiring very soon, I believe
December.
November. What is the plan on that? Are you guys going to sell, or do you see that as a potential risk scenario for Goto?
Yeah, this is the question that everybody is asking. I mean, okay, so first of all, I think just to take a step back, if you look at what Goto has achieved to date, it's it's nothing short of phenomenal, right? This is a company that started out as a motorcycle ride-hailing company and is now, it's easier to talk about what they don't do than what they do, right? Possibility to become the largest financial services company in the 4th most populous country in the world, right? And so if you think about that, and all of this has been achieved in 11 years, right? This is the largest IPO that I think Indonesia's ever had. And quite frankly, to date, it's one of the best, if not the best, performing tech stock that had an IPO in the last year, right? And so I think we shouldn't sort of take away from any of that. I think the reality is the markets are soft, and so, you know, the reality is that it will likely see some sell down in December from investors. There's a lot of early investors that are keen to monetize. I think that's a reality that we'll have to face, but I think it's a little bit early to tell right now, right? We were early investors, we were the Series A investors, and so obviously we're sitting on a pretty hefty gain right now, but there were others that came in later. So we'll have to see what happens in December.
So you guys are planning to sell then?
I mean, we're financial investors, right? Like I said, we've been in it since the Series A. And so you can imagine for someone like us as a Series A investor, where our cost base was a lot lower than the guys that came in the recent rounds. Obviously, our inclination will be to sell, but you know that's not necessarily going to be true for everyone.
Yeah, because I think the conversation of DPIs now is a very big conversation, especially for a lot of these Southeast Asian funds. You can weigh in as well, even though I know you have a global portfolio. But how are you guys thinking in terms of, you're also into your 3rd fund, I believe. In terms of DPIs, maybe if we can just run through all of you, how have you guys been performing on that front? What kind of exit opportunities are you looking at, and how given that the IPO market, I think, is pretty much shut for at least a year, what kind of forecast are you having for your respective portfolios?
Experts.
You go first.
Yeah, we're like pretty like DPI focused. So yeah, I mean the IPOs take a long time. We're seed and Series A, right? IPOs take a long time, M&A take a long time, and it's kind of random. So I guess there's always like if the companies like grow a certain amount, it's always I think it's always I mean you kind of work with the company, right? You say hey, we always like take some chips off the table. So we just have like we make a 5, 10. I mean we have companies 50, 100x, right? Like over 100x. So I mean it's fine to take a little bit off the table. So as long as it's well coordinated with the company. So yeah, a real good network of like kind of like brokers, secondary funds, family offices that like to buy kind of like take over our stake in some of these companies at the right time. So like the Series C, Series D, pre-IPO. So I think that's good because I think because LPs when they get the money back, they put some of the money in the new funds, right? So I think it's very good for the ecosystem. You can recycle capital because people are just waiting too long to get their money back. Like.
Yeah, I think from my perspective, you know, when I first went to China in about 2005, LPs were asking this question as well, right? Okay, you have Sina, Sohu, NetEase, but what's next? I mean, are you going to have, you know, big outcomes like in the US, right? And then we had Baidu and all that. I think people stopped asking questions about DPI. And then there was, you know, when I went to India, I think around 2019, you know, LPs also were asking like DPIs, you know, there's Flipkart, but what else do you have? You know, not many IPOs, like Make My Trip is so-so. And then, you know, you have a lot of IPOs in recent years. So I think Southeast Asia is the same, right? I think there's been a few IPOs. So that at least, you know, we know IDX is open, right, for tech listings. You saw GoTo, you saw Bukalapak. Hopefully there'll be more coming. And so I think I'm more bullish on the fact that, you know, IPOs will come as long as the companies, you know, get to that scale and they can perform like public companies, right? I mean, it is a high bar, you know, you do have to meet quarterly earnings and things like that. But, and then the other part, I think, would be M&As, right? I think that similarly, like in China, you know, I think initially the M&As were very small, but once, you know, competition builds up and the tech giants need to grow by acquisition, they'll start to pay up for these targets, right? And then lastly, secondaries, of course, because we're early stage fund, so we can take money off the table. We don't have to wait for companies to get to IPO. As an early stage fund, we can, you know, exit at the later stage rounds, and we have been doing this. Actually, even right now, we're in the process of doing some secondary sales to new investors who are coming into our companies.
Okay, cool. Yeah, I mean, I think Helen raises a really important point. IPO is not the only way to have an exit and generate DPI in this region. And I think one of the really exciting things in this region is that actually the exit options have expanded dramatically. When we talk about IPO, it's not just NASDAQ, New York Stock Exchange, obviously GoTo on the IDX, but you know, Thailand has a very liquid market, right? That's an option for companies that are based in Thailand. We listed one of our portfolio companies on the ASX in Australia. That also is a very liquid market that understands Southeast Asia. There's been other companies listed on the Hong Kong Stock Exchange. And so even the exchanges have broadened quite a lot. I think the really big different dynamic now versus even 5 years ago is that the strategic buyer landscape has really improved. You have the likes of Google and Microsoft and all the big US strategics really interested and excited about the region, but actually, one of the most active buyer groups has actually been the technology companies here in Southeast Asia itself. Grab, Gojek, Traveloka, and this is a buyer category that did not even exist 5 years ago. And so I think that has actually, that's actually formed a really significant cohort of buyers for startups in the region. The other thing too is I think with secondaries as well too, a lot of the secondaries funds here, not just here, but globally have a ton of dry powder. And I think the really different dynamic now is that there are not only Asia funds or global funds with Southeast Asia specific allocations, there are now actually Southeast Asia focused secondary funds too. And so that again is another pool of capital. And you know, I think we haven't talked about SPACs yet. That was like a very 2021 thing. But I think the fact of the matter is that it is an option nonetheless. And so, you know, that was something that was not even imaginable 3-4 years ago.
I mean, all good points. I just add 2 more points, which is that I think you have to see your LP base, what are they looking for, right? I mean, we're in the venture business, and it's a power law. We actually made a mistake because, we had a company that we invested at 5 million. We were 20x in 1 year. And, well, we had an offer to sell. We sold it. Now it's 3 billion. Right? So, you could DPI, and some LPs are very happy with 20x in 1 year. But, we are in the hits business, right? If you're in a fund with no, okay, the difference between a top tier fund and an okay fund is 1 or 2 hits. Now, if you were to prematurely sell some of these companies, which people want to buy, it's funny, people want to buy your best companies all the time, right? So if you were to sell some of that, it becomes from a top tier fund to an okay fund. So I think it's important to be mindful of not selling your best companies. Yeah. And I think the precursor of that is your LP base, right? So if you talk to the US endowments versus the Asian family office, US endowments say, oh, hey, you're in the venture business, we don't expect any money back until 10 years, right? So take your time, relax. Some of the Asian family office, okay, show me the money, right? So I think your strategy depends on the LP base you've constructed, and that informs your strategy. Because if you have LP base that's chasing you for DPI, you obviously have to deliver something, but that might result in a lower net DPI.
Yeah, one of the things that I also have been exploring is also the likelihood that demand for secondaries, I think, is going to go up, especially if we think about, if IPOs are not going to be coming anytime soon. We've got a bunch of these funds that need to kind of demonstrate to the LPs that you are able to generate DPI back, return capital back to your LPs, get them back for your subsequent funds. But if I just kind of look across the board, you haven't really seen that many secondary funds, at least especially those that are dedicated to tech. I was wondering, in your opinion, do you think there's a gap in the market? And is that something that potentially some GPs could fill?
Maybe I'll take it first. I think that the market in Southeast Asia is still very early, right? We really saw maybe the first crop, AC Ventures around, Convergence started around 2014. So I think that for secondary funds, usually they come in when there is kind of a bottleneck, a lot of deals build up, a lot of bottleneck in terms of exits, sometimes in China, the IPO market sometimes gets shut down, because it's based on the regulators' approval. Then the secondary funds come up and they provide the liquidity that is much needed. But given how young the ecosystem is, I think it might be, that's why you don't see that many secondary funds in the market targeted at Southeast Asia. I think that's just the supply and demand.
Okay. Maybe you can take some questions. We have 6 minutes left. First question is, some of the most active investors in Southeast Asia until 2021 end, like Tiger DST Global, A16, and Insight Partners have gone quiet. How does this impact growth stage funding? Any takers?
Yeah, I think I mentioned earlier, I think with the retreat of this cohort of investors in particular, it's helped to moderate valuation quite a lot. And so if, we have a growth fund, we have dry powder to deploy, so pretty excited. I think there's going to be some really good investment opportunities as a result. I would say that this group in particular, they were really focused on Indonesia in particular. They were really focused on the fintech industry in particular, a little bit of Vietnam as well too. I think, we've always taken a view that we're Southeast Asia focused, not just Indonesia. We're also investing heavily in the Philippines, in Thailand, and in Vietnam. And so those were opportunities that I think were largely overlooked by a lot of these crossover funds. And so I think that's, I think for people like us who are deep in the region, who are here to stay, hopefully we'll still be, the 4 of us will be still sitting here 10 years from now, talking about Southeast Asia. I think it's a really good dynamic for us. I think some people will say, oh, but they were filling a gap in the market. I think there is still a gap in the market and opportunity for growth stage investment. But I think at the same time too, this is going to create opportunities for consolidation. It's going to be, I think it's going to be healthy for the ecosystem. It's going to create stronger growth stage companies that can get to IPO faster and generate DPI for investors as well.
There was one question that I picked up from one member of the audience before I came here. Bit of a big question, and this goes out to all 4 of you, is, have VCs been a moral hazard as we enter in this, we're kind of crossing into this new era where the liquidity has dried up, the money's gone. We've seen a whole wave of these companies that didn't get the kind of DD corporate governance attention that they should have received, and therefore are disintegrating before our very eyes. What role does the VC play in that era and moving forward? It's very easy for a lot of VCs to say like, yeah, 2020 vision, that's what you should have done. I just wanted some of your thoughts on some of that as we are kind of crossing into this new season.
Yeah, I think it's a matter of, the pendulum swinging, right? So in the bull market, the VCs are kind of hard-pressed to just give out term sheets quickly and to do less due diligence because it's such a competitive environment. And then, in a bear market, we have more of the leverage, right? So I think VCs would take more time to do deeper due diligence. But I think you have to have certain discipline, right? Certain standards, because when you loosen your standards, that's when you get into trouble, right? When VCs don't do enough due diligence, don't have enough oversight on the companies that they're involved in. We try to have a more active role on the board. We want to make sure that we track the companies quite closely, and so that when things are not going well, we can really help the companies to go through the tough times, right? I think that in the bull market in the last few years, there was a bit of a, of euphoria, and I think some people just want to just push up the valuation as much as possible. I think some founders, some VCs as well, they want to muck up and show at least good MIC for the LPs, and so then there is a tendency to let the valuation run ahead of where the company is. And then to deliver on that, entrepreneurs may sometimes be inclined to do kind of funny things, right? So I think that's a very unfortunate. I think I would, strongly advise, investors, fellow investors, first of all, to walk away from founders that you don't think have respect for investors, right? Investor interests. I think is not, you don't have to just chase the hottest deal, all right? Yeah. You can just let that go if there ever was a concern about integrity. And then two, I think to really, do proper due diligence, right? I'm actually quite surprised. Sometimes I can just Google about a founder, and you can be amazed how much comes out, right? And this guy was in trouble for insider manipulating his stock at a previous company. This actually happened. One of my cases when I was looking at in China, and lots of VCs piled into this deal because it was the hottest thing. And then thirdly, when you're in the with the company already, when you've invested, make sure you stay on top, right, of how things are progressing at the company. Things can turn very quickly, right? If you don't catch up with the founder for a few months, then you might find that the cash has dwindled very quickly. So I think being able to spot when things start to change for the worse, and then trying to rectify it, I think it's also a very important part of what we do.
Yeah, because it also kind of raises the bigger question about whether the whole VC game is kind of broken in a way. Are VCs aligned with founders, in this kind of market where, at the end of the day, you see founders kind of fall by the wayside, and then the VC just scoots off and said, well, VCs, I guess, you guys are also under pressure in a lot of ways, right? You guys had to deploy checks and compete, and, all this talk about DD, being too relaxed. I just wanted some of your thoughts in terms of what you guys thought.
No, we're not evil people.
Yeah?
We are not evil people.
Yeah.
To Helen's point, where she mentioned the example of the Chinese founder, right?
Yeah.
I don't think it's specific to Southeast Asia, right? Last year, market was crazy around the world. It was crazy in the US, it was crazy in China, it was crazy in Latin America, it was crazy in India. Yes, it was crazy here as well, too. And so, did people loosen their standards a little bit? Yeah, probably. But it's not specific to Southeast Asia, right? That's been happening around the world. And I think if anything, this is the first time that we're seeing a downturn in the Southeast Asia technology ecosystem. It's good, we're all gonna learn from it, right? And it's gonna make us better investors as a result. And so I see it yes, there's going to be some mishaps, and yes, there's mistakes made, but we're all going to learn from it, right? Seeing all of this news about Zilingo and some of the other startups, right? Like, okay, maybe if you weren't so focused on governance, now you for sure will be focused on governance. And so that's healthy for the entire ecosystem.
I'll just end with two thoughts, which is,
Yes.
first thing we do after we invest, get a CFO. And second, I think chase value, don't chase valuation. So, and actually on your other point it's quite funny because you said VCs tend to invest fast in Euphoria. We used to carry a printer around to print term sheets. And we still do, actually. We print it from the cloud.
You still carry the
But
printer.
it doesn't mean we don't do due diligence. It means that we've done it before we meet the founder. And then we put a CFO once we invest. So I think there's a difference between investing fast and investing poorly.
Yeah.
And not deploying capital. Deployment, we don't use the word deployment of capital.
Yeah, we invested in China or US, we've seen a couple of cycles. So you see the pendulum swinging a couple of times. So yeah, I mean, we definitely make some mistakes early in the career, you chase the deals that everybody else is chasing, you invest at too high of a valuation. So yeah, I mean, we try to stay away from that. So we try to find founders who are overlooked and geographies or verticals where people aren't looking as much. Like diverse founders. So yeah, so I think we get much better valuations and you get much stronger relationship with the founder as well. And we add a lot of value. So we're not just another fund chasing the hottest deal out there. So.
All right, I think we've come to the end of the panel. Thank you very much.
Thank you.
All of you and for all of you as well. Thank you for joining us today.